The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, DavidWhite. Now, the author of The Path of Least Resistance and the Tech Insider, DavidWhite.
And welcome all to another wonderful edition of the Power Trading Hour. As always, your host, G. Gordon Liddy here, sitting in the seats. Of course, I used to be Sharknado yesterday. I'm going to be somebody different every day. Just have to put on a new hat, look through a new pair of eyes. So I'll be G. Gordon Liddy today. I always just like the name. The guy, rather interesting himself. He certainly turned his life around after prison, and interesting dude. Just happened to be thinking of him. Anyway, what else do we have going on in the market? It is the S&P's up 20 points. It is, 1980? Yeah. $19.80 up on the S&P cash. We do have at least a decent volume today. I wouldn't say breakout volume, although we can still get that today. 2.5 billion shares. Yesterday when we came in here, it was, a little over 2 billion. So we do have, 500 million more shares on the consolidated New York Stock Exchange. But what can you say? It is what it is. We'll watch this to the end. This is probably the end of fund buying. We may see it a little bit into Friday morning, but for the most part, most of the money, if it was ever going to come into this market for these funds, will be in by probably noon or 11 o'clock in the morning. So we've seen a little pop up here. Of course, looking at the rest of the markets, rather interesting also. We have gold at 13.10. So not really doing that much. Dollar index up 82 cents. Really kind of interesting that we got this pop with the market up as many points as it is up to. Other things, momentum, we've been waiting for copper to give just maybe even a little eye, and we've got it up, it's going to be up about 4 cents or so today. 5 cents, but it's at least it's coming off the bottom. Certainly not with any kind of sign of strength yet. Natural gas is off a bit. UNG's trading out at 17.92, off about 30 cents. We did have the EIA numbers come out at 10:30, but still seasonably cool, and so we'll see nat gas down here. Probably getting ready for the contracts to be signed, and we'll see how that works out. Probably, I would say the most interesting thing to me today is that dollar index up 82 cents today on the current contract. That's going to be very interesting that we see that movement. It correlates well with gold and with silver, which is silver's flat, $19.62. I still am looking for gold to come back to probably that 1275 level. Even when gold, the markets sell off, gold will sell off a bit normally. That is because many hedging strategies depend on, as the market goes up, you buy more gold. As it goes down, you sell gold. A basic theory that has been around for at least 30 years was that if you're going to hedge a portfolio with gold, that the higher the market goes, the farther it can drop. Therefore, the more you buy. And, of course, when it starts heading back down, you'd think that a lot of people would instantly start buying gold. And just the opposite. A lot of the hedges will come off first. You get the first drop in gold, and then later on the actual move to safety. So always nice to actually take a deep breath. I suspect when this market does roll over, we're going to see that 1275 on the gold, and then that's going to set up the next move up probably an ABC. We could get one more test of the $1,200 level in gold. At least that's what I see. Other stocks of interest, kind of interesting to see that almost all of this is on the back of the biggest stocks in the Dow. For the most part, we're not seeing the kind of movement that I would like to see broadly, to think that this is a super broad market index. Let's go through a couple of them. Amazon is up $2.50. Doesn't really make it look like people are coming after that a whole lot. IBM's up $1, which is about 0.5%. Google's probably the strongest stock in the at least the tech sector out here, up 1.5%, trading out at 902, but still not at its highs and certainly not following through a lot. Facebook is up $1.18 and right back up against the IPO gap down. It's going to have significant resistance against that levels. Microsoft off 12 cents. We've got Intel off 10 cents. So when we look at what we normally think is a lot of these big flyers and high flyers, it is the ultra short stocks that are really getting the boost, and the stocks that are in the Dow, the most sacred of blue chips, which are kind of moving the market today. Apple up $3, which is just 0.6% at 455.48 for the last tick. It still makes me suspect that we are going to have at least some level of cliff forming here. Let me put it that way. 2.6 million shares, or excuse me, 2.6 billion shares on the consolidated New York Stock Exchange tape, which is good. But makes me think that we still have a market that's rather suspect. I would have liked to see in a move going above such a huge milestone as 1,700 on the S&P, that we would get probably 5.5 billion shares today. Right now we're trading, so maybe we get 3.9, 4.2. Which is okay for a summer day, but not okay for blowing out all kinds of recent highs. We're going to be looking at a lot of charts today, but first, and as normal, most of the time we actually try to get into the news a little bit. There were some very interesting articles out earlier. One of the things that caught my eye was the NSA chief was at Black Hat. If you missed the Tom O'Brien show last Friday, I was talking to him about the big hacker convention in Las Vegas at Caesar's Palace. Well, he basically showed up and was booed off the stage. They asked him how they could believe anything he said when he would lie to Congress. He said he didn't lie to Congress, and of course everybody knows that he lied out his exhaust orifice in front of everybody, and proved just a couple days later that he had done that. And that is the problem. So a lot of these hacker guys, they go there and try to get as many as they can, because normally it's a target-rich environment for finding the kind of people that they need to go out and chase others around. Well, let me see. I was actually looking for this other article here. Maybe I'll find it. Yeah, I'll look for it here while I'm bringing up this other one. Kind of interesting, Wall Street intersecting with Hollywood a little bit. And, of course, my favorite show is coming to a close, and that is Breaking Bad. My namesake, Mr. White, the chemistry professor at the local high school, once a promising and very talented chemist, ended up having to get rid out of a big startup, and ended up, he would have been a big billionaire, of course. He gets cancer and decides to go into the production of meth. But William Buffett was at the New York premiere of the final season last night, and he was walking the red carpet and posing for photos with the younger guy in that show, Aaron Paul. But he says it, let's see, what is he? This is the number one show on the air by far. And why an 82-year-old billionaire would think it was the best show in the world, I think it probably could be. Kind of hard for me to think that the 82-year-old billionaire is vicariously moved by Breaking Bad. But great show, and if you haven't seen the trailer for it already, very interesting. And that's him doing I think about a 100-year-old poem in character, Bryan Cranston, as Mr. White. It's interesting nonetheless. I was trying to actually find an article when I was looking in here, but may not find it here. Maybe I'll find it. It's just actually I get so much mail, but that's it. Interestingly enough, we were talking about Amazon not really moving. One of its competitors came out last night and actually started talking about how much money that they are making in the cloud, and was surprised that it wasn't showing up in the books. And the company's called Profit Bricks, and they kind of in the same kind of space, but say that Amazon's low margins are a myth. They say that the company is really making like 60-80% profit on their cloud computing services. I can't really think anything. Oh, here's the quote. I calculate Profit Bricks pricing on a regular basis. We are a little smaller than Amazon. That's a joke. They're vastly smaller. So I'm pretty sure that the prices we pay for hardware, data center space, or energy are higher than Amazon and other big players. So here's the deal. If I were to sell our products same price as Amazon or Rackspace does, I would have gross margins far higher than the quoted 60 to 80%. So kind of interesting that maybe what I thought was a loser, they've been able to make a profit at, and a big profit on one of the things that they are discounting the most. So maybe there's a lot more money there to be made. But I thought that was rather interesting. Let's see what else out here. I brought it up a little bit a day ago. I've had a little bit more time to watch the actual video and his comments. But market skeptic is Bill Fleckenstein is still out here warning that we have the possibility of a market that could break 25% in 3 days. Again, he has been fairly good at the downside. He has been consistent and a loud opponent of the Fed's easy money policies, but very interesting. Let's see here. We're not comfortable with these policies, he says. Obviously, we can't print money forever or go no emerging country would ever have gone broke. So the bond market starts to back up, the economy gets worse, and now because rates are rising. So the Fed says, we can't have this, and they decide to print more money, and the bond market backs up even more. Basically the endless loop scenario. We'll be back in a minute.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Going to be interesting how the day closes out. 2.7 billion shares on the consolidated tape. So we have a little bit better volume than one would think. Of course, this is probably within the last 24 hours of the fund buying season. It'd be kind of interesting to see it. We have the S&P up 20 points and almost 21 points. That 2.7 billion share day broadcasts out to probably 4.2 billion shares at the end of the day, which is probably $1 billion to $1.5 billion less than would really suggest we're going to have a sustained breakout. Of course, during the summer, we can see these things stretch incredibly far, and we already have seen a market stretch incredibly far, but we'll see how today ends. Don't get too excited just yet. We saw how yesterday had a turn in it. We've got some others out here moving, and we'll want to get to those. Let's see what else we have. Where's my... Got to keep my desk more organized here. It seems like keep on losing stuff. There it is. I'm going to go back here and look at what is in play today. When we looked to the shores to the east of us, the FTSE was off 0.9%. Germany's DAX was up 1.6%. France was up 1.3%. Spain up 1.3%. Portugal up 0.8. Italy up 0.2. The Fighting Irish, were up 1.6, and Greece was up 1.8. probably on the back that they're getting $3 billion more, a little less than $3 billion more. We've got some stocks making fresh highs, even with some of the bad news that Federal Express came out with. FDX is back up to a high over $109 today. Some of the big movers out here, CTRX. And why I'm bringing this up, you can always give me a call at 877-927-6648. That's 877-927-6648. Don't everybody wait until the end of the day like yesterday. And you can also email me at path@tfnn.com, and I'll try to answer your questions. If you don't want to go on the air, that's PATH@tfnn.com. So CTRX, which is catamaran, is that right? Yeah. Beat earnings per share by a nickel and raised fiscal year 13 EPS above consensus. It's not bad. But is that right? CTRX. That can't be right. Oh, it's not. Okay. Sorry, just a second. Let's try this again. There we go. Catamaran popped up. It's in the gap. That gap started on May 2nd, came down with 4.5, almost 4.6 million shares. This thing came right back up to its gap, a familiar pattern if you've been listening to the show over the last couple of weeks, and that is these things popping right up to previous highs. This one hasn't broken the last major high out here, which was April 30th. It did break the June 11th high that had 8.5 million shares, but it's mostly, I think, this gap that we're looking at here that is the most interesting with let's call it 4.6 million shares. 2.9 today suggests that we're going to be light on it, and it's kind of just bouncing around in this big trading range from about $46 up to, let's call it 58. And what else do we have out here? Probably the most interesting to me was Yelp, YELP. This, of course, the gripe line for mostly some workers, but mostly restaurants. Very heavily used in Chicago, New York, L.A., less well used other places, but has made a big impact. You now have a board to go and yell and scream about your rude waiter and that kind of stuff. Very interesting. This thing really blew out what most people were thinking about. It beat on the EPS by 3 cents, beat on revenues, guided up Q3 and guided fiscal year 13 revs above consensus, upgraded by a number of folks, and upgraded, outperformed. It did well. That's probably all you have to do. Anyway, you can give me a call, 877-927-6648. Email me at path@tfnn.com. And we'll be back, hopefully, with some phone calls, and we'll be looking at some stocks here, see how they're doing as we break these highs, and look at some of the ETFs around these.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And like I said, we take emails and phone calls. Got a few emails here. I'll answer the first one here, and it's from Pradeep. He's wondering about his trade in EUO, and that is the long dollar short EUO or euro trade. And I had a very nice setup out here. I actually had bought it in the newsletter at $18.22, so I got it pretty close to that major low. That major low came on, June 18th, and down at 18.17, so I had a good entry in it. I thought, we'd probably get a little bit of a pullback, got much bigger, actually sold on the gap down, which pretty much negated the thought of this thing probably doing an ABC up. That was on the 11th. And I got, a 1920 or 1915 or something. So I still got out of it with a nice profit. This thing has continued to come back down. And, we do have a higher volume low here at $18.29. Probably we get back in to maybe test that today. Going into the weekend, all that, expecting this thing to take off, probably not. But I guess the question is whether you keep it. I would say I would probably keep the trade. You put it on for a good reason. Probably the worst idea that you could have out here would be that this thing goes back and trades down to the $17.56 low on February 1st. I like the trade. I think that eventually the dollar is going to break out here. It's been gathering a huge amount of steam, and when that does, the market's going to pull back, and we're going to see this thing take off. And I think, you've got that $20 level, which is the first level of resistance, and then after that, this thing could go back up to the $23 level, which is what I thought when I actually put that trade on at 18.22. I still think that's going to happen. I just think that maybe we've got a little bit more time, and this thing's more in a consolidation zone. For the S&P, it is all about the volume. It is all about the volume today. We were checking back in a little under 2.8 billion shares at 17.06 on the S&P cash. So volume isn't very strong. This is the last day of fund buying, maybe tomorrow morning. I would suggest that at least my plan, I did go short into the highs of yesterday. So I'm not feeling too bad about what's going on in the market. I do suspect that we're probably going to have at least these levels early in the morning. And as fund buying normally comes off, the market pulls back, if not for a day or two, even if we were going higher long term. So I would probably not worry about it too much. Doesn't look like there's a lot more in the tank for today, and probably going to look at a decent chance of at least a decent pullback, maybe into yesterday's lows over the next couple of days, and then this market's probably going to decide whether it wants to break out higher. And at that point, we're going to have to see volume. Like I said, we've got decent volume, but it's not the kind of volume that says this market's going to rocket much higher. Yesterday, the volume was so poor, of course, it rolled right over. Today, pretty much all driven by the Dow stocks. And when you see the narrow leadership like that really driving the indexes, it is a very good time to have your spidey sense come up. I got some other emails here. Let me see here. This had really nothing to do on this other than he is chastising Disco Steve. Yes, that is. It's just a horrible music. Anyway, we are he's not happy with the disco music lead-in, Disco Steve. So anyway, not a real question about it. We got a couple other ones that I will get to. Cabot came out last night, CBT, Cabot Corporation, and they had kind of a sell-off earlier in the day, pulling back up, still in line. This one I was kind of interested in because it had the opportunity, or at least the I'd say it's an opportunity to come back into its huge gap down day. That gap down day was the 31st of January when this thing ripped down with over 2.4 million shares. It's banging at this gap yet again today, and yesterday it had 700,000 shares. Today 550,000 shares already. This one is not a bad setup to go short. Your belief would be that this thing would come back down to the $32.13 level. Cabot Corporation, let me get your profile for them and read about it. But an interesting setup, at least a failure at the gap for the moment out here, and on earnings can't really get going. Cabot Corporation operates as a specialty chemicals company in performance materials. The company offers carbon black form of elemental carbon to use in physical properties of systems, basically all kinds of rubber hoses, extruded plastics. It makes all kinds of stuff to put in other stuff. Let's put it that inkjet ink. That this thing came down with such heavy volume, has not retested that $32.13 low, really opens up those. And we've got the new trading puppy, Little Vix, who can't leave this little tray alone. in the background, so I'm going to have to come after it and get it for her. And normally, when I take it away from her, she's going to bark. So if you hear any barking, it's because I took away her plastic noise-making toys for the remainder of the show. Anyway, we're looking at the IVV. This is another one that is showing, and one of the reasons why I'm not willing to bite and say that we're going to blow off to all-time highs here. That is the IVV, which is the S&P Index Fund. We have the May 22nd high that had 10 million shares at 169.93. We've gone through that today, jumped over it. But so far, just 5.8 million shares, which means we're going to come up light in that ETF. When we look at the IVW, a similar one, it's the growth version of the S&P 500, weighted to growth. Okay, what do we have in these ETFs? $89.09 on May 22nd with 820,000 shares. What do we have today? 450,000 shares. Okay, so let's go to the IWF, which is the Index Growth Fund, but it's the Russell 1000 version of this. Let's go to a little shorter time frame here. This one had its high on May 22nd, 4.1 million shares, $76.87. We are going above it, but on 1.5 million shares so far. So while we have a lot of movement and churn in the broader indexes, the ETFs are not confirming yet. Now, maybe we see some volume in the daytime soon, but it's still under... It's still, let me say, troublesome. Let me see what I wanted to get here. Options profile. Oil States International, OIS, is another one of these that came up. And rather interestingly, broke on higher volume yesterday and closed back into the trading range. Again, coming back on a heavier volume today also. Oil States International, through its subsidiaries, provides specialty products and services to oil and gas drilling production companies worldwide. At the same time, of course, we're seeing a huge bounce in crude today. Let me see what the, let me find it there. Well, we were up $2.64 at 107.68 today. So seeing some dichotomy out here that it would be interesting. OVTI, this was another one that I found interesting today. This is one of the ones that when Apple was actually coming apart, it seems, was one of the first ones to really start showing it. This and a handful of other suppliers in that whole sector. And they make camera and camera lenses and electronics to actually go in the camera for things like color correction and brightness and change. All the time you take a picture, it is heavily processed in those cameras to make them look good. This thing is bouncing a little bit today, but actually not a bad-looking chart out here. When I struggle to find stocks that actually have broken out with volume, come back with lighter volume, this is one very interesting chart. OVTI, it is one that took off with volume, a sign of strength, everything you're asking for on the 31st of May with 11.5 million shares. This thing has pulled back with a very light volume, which is exactly what it did. You got a doji right in the middle of the remaining gap yesterday, and this thing bounced up. Again, no heavy volume yet, but you know, if this thing pulled back once again into that $16 range and had very light volume, I think this is one, if the market is going to break out, that you want to be watching. These are the kind of setups at highs that I don't mind. Most of these other ones that have gone to highs and show extremely lighter volume are a little less interest. Another one that is peeking its head, it's doing a little turtling today, is Signet Jewelers. Jewelers? I have Jewelers. I have to actually say it again. Jewelers. Anyway, Signet Jewelers, SIG is the symbol on this one. Last major high out here at $72.52, 1 million shares. That was on May 22nd, as many of the highs have been. So what are we doing today? About half that volume today, and of course we're probably going to close higher than that by the end of the day. But again, pretty weak volume for some of these stocks out here. I'm looking at the ones that have pulled back on light volume and the ones that are breaking out on lighter volume as possible ones to buy at the lows and ones to sell at the highs. What else do we have out here? Tesoro. Another one that gapped down. It's kind of a minor gap. It's right in it. TSO is the symbol on this one. Kind of interesting, but when you're normally looking for stocks that are creating ABCs, this one really kind of stood out. Volume a little better yesterday, but you had even bigger volume as you went through the candles of June 20th and June 21st. Those were 6.3 million and 4.7 million shares. We had 3.8 yesterday, so went through those candles on lighter volume today. Not much a follow-through either, especially with the market breaking out to higher highs. That's where we start picking up and looking for possible ABCs. If you set this up as the A at 65.75 on May 20th, your June 3rd lows out here at 49.26, and today as the C point, that give you a 52% reversal and an ABC set up to $41.50. And as soon as you do that, the next thing you want to do is look at where $41.50 would take you, and pretty much back into this consolidation zone of last year from about October through the beginning of the year. So interesting chart setup. WX, let's take a quick look at that one. And this one, another one out here is Wu Zai Pharma, no doubt a Chinese pharmaceutical company out here. Very interesting, trying to break out today. Didn't have the volume and a nasty-looking doji. Out here, the last major high was the June 12th high at $21.84, 580,000 shares, 250,000 so far. So we are in that high with about half that volume so far today. So kind of interesting that we see some of these stocks moving and some of the other ones not. But it'll be interesting. I wanted to see what else we had going on. Let me move some stuff around on my desktop. It's a mess today. Just so many things going on. See if we can find it here. What happened to that? Oh, there it is. It's buried under all kinds of stuff. Let's see, what else did we have out here? Looked at that. Look at that. Reith Assens, CBOE. Oh, and I have to admit I'm a little distracted. I have a small 10-week-old puppy chewing at my ankles at the moment, so it's a little bit distracting for the most part. But when you have to get a new trading dog like Vix, you got to train her well, and most of that is sitting at your feet while you work and getting her trained to hold it while you wait for either a break or the market to go flat so you can run outside real quick. Yeah, those are the ones I was looking at so far. Let's go ahead and look at some of these other ones real quick. Let me pull something up for our list. I'll do a little tap dancing here. You can give me a call, by the way, at 877-927-6648. Oh, we're going into the break here. Or you can email me at path@tfnn.com. We're going to look at some of the NASDAQ movers as we close up the show today. And just watch this volume like a hawk as we get in there. 1705 right now, 2.8, almost 2.9 billion shares. On track for 4 billion for the day.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
This is getting so tiring. So tiring. Oh, boy. Disco Steve just has to stick it in a little bit more each day and turn the knife a little bit. And things are going so well. Anyway, I don't know if we have Ron from Denver on. He was calling about a soda, but someone was too busy playing disco music to answer whether he was still. Oh, he's still on the line. Let's go ahead and tell me how much you dislike Disco Steve. You can get a jab in. Just give him a good kidney shot right now for me.
I like your other type music better. But,
okay. See, I think everybody does.
It was cool.
Okay.
I messed up. I thought that Soda was going to come out with some disappointing numbers.
Uh-huh.
And they came out with good numbers and blew me out of the water. I just wondered, I know about 3 months ago they did that. It went up for a couple of days and then went down to 50. And I just wondered, if you looked at it, what you thought.
Well, this thing's been bouncing around mostly on the numbers or belief that they were going to be bought out by Coke. I think that was always one big pack of lies, that Coke or Pepsi wasn't going to pick them up. The idea was that, there was always this car that got 200 miles per gallon, and General Motors always buying the patents, those kind of conspiracy rumors. Well, they were pushing that same kind of thing around on SodaStream for a while. When this thing really came off the top, it came off with fairly decent volume because everybody, I think it was the gal at Pepsi, who said, no, big fat lie, we're not buying it. I think she's a gal from India. And that was pretty much. But they always run these rumors when people are on the other side of the earth and it takes a long time. They're probably asleep and it's 2 a.m. there. And that's exactly what they did on SodaStream. She did pick up the phone, though, and pretty much put the kibosh on that rumor right off the top, that 77.80, and it's been going down ever since. Got a little pop on some decent earnings, but you got no follow-through today. What price are you in?
I just bought some puts on it, looking for some disappointing earnings. But I understand there's 40 million shares short, so I'm sure that short covering that's doing it.
Yeah. What month do you have?
These are the August 55s.
Yeah. I think you're probably going to have a tough time getting that. When do we have expiration for? Expiration will be the 16th.
Right.
So, yeah, you got 2 weeks. What are they trading for right now?
I haven't pulled them up. I honestly don't know.
Okay, hang on just a second real quick. Options. They are the 55s, though?
Yeah, I got under $1.60.
Okay, 55 puts.
I'm sure they're...
let's take a look at them real quick. 10, 20 cents. That was, yeah. Yeah. Yeah, you're not going to go very far with those unless they have a big surprise. Are you watching Tiger TV?
Yes, I am.
Okay. When did you buy these things? What price was the stock at when you bought the puts?
I think they're about 59, 58.
Okay. The thing that I would probably have looked at before this trade was it's not perfect, but this thing had some fairly decent level of confluence, and that confluence went from $57.68 to $60.00. You're probably not going to get it, but in case the world comes to an end at 20 cents, I'd probably hang on to them through expiration. You may get a surprise after. Thanks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.